If your support and resistance levels keep failing, it's not because the market is unpredictable. It's because you're trading levels that were never strong to begin with. You mark a level, price reacts once, and you assume it matters. Then price comes back, cuts straight through it, and your trade is over in seconds. That's not bad execution. That's trading unproven levels. Real support and resistance isn't static. Strong levels get defended again and again. Weak levels break once and never work again. And the highest probability trades don't happen on the first touch. They happen when a level breaks, flips, and gets retested. The problem is that almost nobody tracks that entire process in real time, so traders keep reacting to old, invalid levels and miss the zones institutions are actually trading. In this video, we're going to show you an all-in-one support and resistance tool that solves that problem. It automatically plots higher time frame levels, tracks retests and breaks, and alerts you when something important actually happens. And make sure you stay until the end of the video, because we'll also show you a simple strategy you can start using today with this indicator. Let's dive in. Support and resistance are the foundation of every trading strategy, but most traders don't really understand what they're looking at. Support is a price area where buying pressure is strong enough to stop price from falling. Resistance is a price area where selling pressure is strong enough to stop price from rising. These aren't random lines. They're areas where large market participants have positioned themselves. When price approaches these areas, one of two things happens. Either price reacts and reverses, or it breaks through and continues. That decision is where trading opportunities come from. At a deeper level, support and resistance represent imbalances between supply and demand. At support, demand outweighs supply. Buyers absorb selling pressure and push price higher. At resistance, supply outweighs demand. Sellers absorb buying pressure and push price lower. Every time price reaches one of these zones, you're watching a battle between buyers and sellers, and the outcome of that battle determines your next move. So how do you actually identify reliable support and resistance? The most consistent levels form at swing highs and swing lows. A swing high is a point where price pushed higher and then reversed lower. A swing low is where price pushed lower and then reversed higher. These points matter because they show where one side of the market clearly overwhelmed the other. When price returns to these levels later, there's a higher probability it reacts again. Not because of coincidence, but because those same participants are often still active there. That's why these areas act like footprints left behind by institutions. Now let's talk about how traders use support and resistance in practice. There are two primary approaches: reversals and breakouts. A reversal trade happens when price approaches a level and rejects it. You're trading the expectation that the level will hold. A breakout trade happens when price pushes through a level with momentum. You're trading the expectation that the level will fail and price will continue. Both strategies work, but the key is context. Is price trending or ranging? Is the level fresh, or has it already been tested multiple times? Is there confluence with higher time frame structure, volume, or momentum? These questions are what separate consistent traders from everyone else. This brings us to one of the most important concepts in support and resistance trading: higher time frame levels. Here's a breakout example. Price is consolidating below this resistance zone, then it breaks through with strong momentum. That's a breakout trade. You enter long after the break, targeting the next resistance level higher. Both strategies work, but the key is knowing which one to use and when, and that comes down to context. Is price trending or ranging? Is the level fresh or tested multiple times? Is there confluence with other factors like volume, momentum, or higher time frame structure? These questions separate winning trades from losing trades. A support or resistance level on the daily chart is far more important than one on the 5-minute chart. Why? Because higher time frames represent larger players with larger positions. When a daily level holds, it's usually because institutions are defending it. A 5-minute level might just be short-term noise. That's why professional traders always anchor their analysis to higher time frame levels, then use lower time frames to fine-tune entries. The problem is that manually marking these levels across multiple assets and time frames takes hours, and that's exactly where this indicator comes in. It automatically plots these levels on up to 3 different time frames. To add it to your chart, head over to TradingView, click the indicators button at the top, search for support and resistance MTF, and click on this one by Flux charts. There'll also be a link in the description for easy access. When you add the indicator to your chart, you'll see support levels plotted in green and resistance levels plotted in red. These levels are based on swing highs and swing lows that represent areas where the price reversed. Now let's walk through the key settings so you understand exactly how this indicator works. The first setting is pivot length. This controls how swing highs and swing lows are detected. If pivot length is set to 10, the indicator looks 10 candles to the left and 10 candles to the right of a candle. For a swing low to form, that candle must have the lowest low, and price must fail to break below it for the next 10 candles. Only after that happens does the pivot become confirmed. Lower values produce more pivots and more levels. Higher values produce fewer pivots, but each one represents a stronger rejection and a more meaningful level. The second setting is strength. This controls how many times a level must be respected before it appears on your chart. chart. Every level starts at a confirmed swing point. That's strength 1. If strength is set to 2, price must return after the swing forms and bounce off the level once. If strength is set to 3, price must bounce off the level twice after the swing forms. Higher strength means fewer levels, but each one has already proven itself. Lower strength shows more levels, including newer ones that haven't been tested yet. Next is the invalidation method. You can choose between close or wick. With close selected, price must close beyond a level to invalidate it. With wick selected, any wick beyond the level invalidates it immediately. This lets you control how strict the indicator is. Now scroll down to the style section. Here you can choose between having levels plotted as lines or zones. If you select zone, the level will be transformed into a zone. And finally, the most powerful feature, multi-time frame support and resistance. You can enable up to 3 time frames at once. If you're on a 15-minute chart and enable the 1-hour and 4-hour time frames, the indicator will automatically plot those higher time frame levels on your chart and label them. You get higher time frame context without switching charts. The indicator also automatically tracks breaks and retests. When price breaks a level, you'll see a B label. When price retests a level, you'll see an R label. If you enable inverse color after broken resistance automatically flips into support, and broken support flips into resistance. This makes level transitions instantly clear. There's also an avoid false break setting. When enabled, the indicator checks breakout volume against average volume. If the breakout doesn't occur with enough volume, it's ignored. This filters out weak breakouts that trap traders. And to ensure you never miss a valid setup, you can set up alerts for breaks and retests. Just scroll to the bottom of the indicator settings, enable the alerts you want to receive, and then create an alert through TradingView. Click the alert button, select the indicator as the condition, choose any alert, and create your alert. Now let's walk through some real trade examples so you can see exactly how to use these levels in practice. We'll start with a reversal trade, then move into a breakout trade. For this first example, we're on the 30-minute Bitcoin chart, and in the indicator settings, we have the daily time frame enabled. That means every level you see on the chart is coming from the daily time frame. Price has been trending lower and is now approaching this daily support zone plotted by the indicator. Because this level is based on a daily swing low, it's already a high-quality area. As price enters the zone, we're not buying blindly. We wait for a candle to strongly reject the level and print a retest signal. After the retest, we'll toggle on this second indicator for extra confirmation. This indicator automatically plots bullish and bearish AI signals and includes tons of other features. It's called the SFX algo by Flux charts. Once we get a bullish signal, we'll toggle on the retracement wave. Once price pulls back to the wave, take the buy. Set your stop loss below the support level or the wave and target the nearest resistance level from above. You should aim for a minimum of a 1 to 1.5 risk to reward ratio. The setup was simple. We waited for price to reject a daily time frame support level, then used the SFX algo indicator for extra bullish confirmation. Once price pulled back to an area where we could get a better entry, we took the buy. Now let's flip this around and look at a short setup. We're still on the 30-minute Bitcoin chart, and we still have daily support and resistance levels enabled in the settings. So again, every level you see here is coming from the daily time frame. This time, price has been trending higher and is now approaching a daily resistance zone plotted by the indicator. Because this level is based on a daily swing high, it's already a high-quality area. As price trades into the zone, we're not shorting immediately. We wait for price to reject the level, then print a retest signal, showing that sellers are stepping in. After the retest, we toggle on the SFX algo for confirmation. When the indicator prints a bearish signal, that tells us momentum is shifting and sellers are taking control. From there, we turn on the retracement wave. Once price pulls back into the wave, that's the short entry. The stop loss goes above the resistance zone or the retracement wave, and the target is the nearest support level below. Just like the long setup, this works because everything lines up. A higher time frame resistance level, a clear rejection, momentum confirmation, and a better entry on the pullback. But reversals aren't the only way to trade support and resistance. Breakouts can be even more powerful when traded correctly. Here's a long breakout trade. Price has been consolidating below this resistance zone for several days. The zone is based on a daily swing high. Then price breaks through the zone with a strong bullish candle, turning the resistance level into support. But here's the key. You don't enter on the break because most breakouts fail. You wait for price to retest the newly formed support level. Once you get the retest, wait for confirmation from the SFX algo. When the indicator prints a bullish signal after the retest, that's your entry. Place your stop loss below the zone and target the nearest resistance level above. This trade works because you're trading a confirmed breakout with a retest and momentum confirmation. Let's see how this looks in a short setup. Here, price has been consolidating above this support zone. The zone is based on a daily swing low. Then price breaks through the zone with a strong bearish candle, turning the support level into resistance. Now wait for price to retest the newly formed resistance level and print a label. Once you get the retest, wait for confirmation from the SFX algo. When the indicator prints a bearish signal after the retest, That's your entry. Place your stop loss above the zone and target the nearest support level below. At this point, the pattern should be clear. You're not trading random indicators. You're trading levels with confirmation. The support and resistance indicator shows you where price should react, not guesses, not hindsight. Levels that have already been defended, broken, or flipped. Then confirmation tools like the SFX algo tell you when momentum actually shifts. That's the difference between hoping a level works and waiting for the market to confirm it. And you're not locked into one confirmation either. You can stack order blocks, fair value gaps, trend lines, or any other form of confluence you trade with. The rule never changes. Strong level first, confirmation second, execution last. This framework works across all markets and all time frames: stocks, crypto, forex, futures. Whether you're day trading or swing trading, support and resistance behave the same way. The indicator adapts to your style. That's exactly how Flux Charts is built. Every tool is designed to work together, from AI-driven signals to multi-time frame price action features, plus screeners and backtesting tools that let you validate your edge instead of guessing. You can get access to our entire suite of indicators, screeners, and backtesters at fluxcharts.com. The link is in the description. That's all for this video. If you enjoyed the video and the free support and resistance indicator, please drop a like, comment, and subscribe. Thanks for watching, and until next time.